Good morning, folks, and welcome back to Almus Market Mornings. We start the week with quite an interesting update. Now, some of you must have heard in our last week's podcast, we had focused on the BOJ's intervention to prop up the yen. And now, both the Japanese and the Americans have confirmed about the joint coordinated operation last week to shore up the yen. This has put markets in a bit of a caution, and now dollar JPY has hit a new cycle low of 155.25, falling about 5.4% from its peak. Treasury Secretary Scott Bessant has also put out a statement in support of further intervention if required. Apart from that, we once again start the week on the back of a drop in peace and fighting temporarily halted, and that sentiment is being positively perceived by the markets. Uh, Good morning, JK. Very interesting set of updates coming from the coordinated intervention. Would this now put a strict ceiling on the yen's weakness?
Good morning, Swaraj. Yes, I think yen has been in the news for the last four days, or rather 3 trading days. Bank of Japan intervened for the first time just ahead of the Bank of Japan's policy meeting, and from about 164 they brought it down to 158, and then ahead of the policy market bounced again, and then again, that first intervention was a slight surprise because markets were actually long and looking at 165 target. Then next day ahead of BOJ, when 160.50 was seen again, they came in and hit the market. And these were very large amounts as well. And, most importantly, as you mentioned, the US has joined in this intervention. And this I'm hearing after what I would say much more than a decade. I don't know when I heard about the US intervening directly in any currency to sell dollars. So that's a big development, and Treasury Secretary obviously has made clear statements that they are joining the intervention. They are ready to do more. And importantly, even Trump made a statement about the intervention, and he also said that US is intervening because US has a good relationship with Japan. So I don't know what else he is trying to convey. Definitely, it is also in his knowledge that dollar has been sold against yen by US as well. Now, importantly, what is the implication of this intervention on yen? Of course, yen strengthens, but there are other fallout also, because we have known that when yen is being sold, everything else is being bought. That is, simply put, a carry trade. The low yielding yen being sold and other high yielding assets being bought. Now, when the yen strengthens, with of course the yen policy rate also at 1% now, long before, I mean, not long before it was around 0.25% and expected to go higher as well. And Japanese yields are also at multi-year peak. That being the case, now suddenly they can put the carry trades in jeopardy. So that's one thing that can be big development or fallout of this yen intervention. Of course, authorities would be aware and they would not like the stock market collapse because of this. So at some point, they can actually try to stabilize the yen. Maybe that is around 155 levels, or just under that, maybe 152. But may not be a one-way move, because that will be a bigger headache eventually for the markets as well as the authorities. So that is one thing we should be looking at. That can even impact the Indian market, because there's a lot of, when I say carry trade, yen being sold, and Indian bonds with a higher nominal yield, as well as the Indian stock market also get benefit out of yen selling. So these are someone fallout that we have to see. The other fallout is that when Japan has to intervene in yen by selling dollars, where do they find dollars? They find dollars by selling dollar assets, and dollar assets are mainly in US treasuries. So when they sell US treasuries, that puts more pressure on the yields, which are already under tremendous upward pressure. And we have already spoken about the bear steepening, etc. So when they sell the long-term treasuries, the yields will go up even further, and that can also become a headache for the US administration. So it is a double-edged sword. So either way, if they don't intervene, yen will keep weakening, and if they intervene and move the yen too much on one side, that can lead to other asset markets collapse. So that is what the authorities will have to keep in mind. So we'll wait and see whether they stabilize it around the 155 mark, which is also a strong technical support. The first time when they intervened earlier in this year, also 155 formed the bottom for the yen. Of course, BOJ also intervened. BOJ also kept the policy rate unchanged on Friday. But some analysts feel that instead of wasting the dollars or using up the reserves, Japan could have achieved this move in the yen by hiking the policy rate by taking the market by surprise. And I agree with that because Japanese real interest rates are well into negative territory, and that can be actually effective tool that they would have used for the end to be strengthened. So that's an opportunity that I missed. So otherwise, their statements have not indicated that they are anywhere very close to another interest rate hike. They are again data dependent, but they also say that the inflation can move swiftly to 2%. As for geopolitics, yes, I think weekend we had Trump's statement saying that we've been asked by Iran and other Middle East countries to hold off any attack that that the perimeters of a deal have been agreed to. So that was a big statement. But then there was also a statement from Iran having made any such request. So markets have actually ignored both of them. So all the focus is rather on the bonds and the yen movements. As far as the bonds are concerned, we have closed at the highs in the treasury yields. 30-year closed at 17-year high and about 5.28%, and the 2-year is also now quoting more than 0.5% above the Fed funds rate. So these are very important development that the market or the authorities cannot ignore. So what is the action that they will take if it keeps going up further? There is also a confirmation that US debt, government debt, has crossed the 40 trillion mark as of yesterday. And we all know that deficit for the year is also going to be quite high, well above 1 trillion. So with yields going up, very difficult to see the authorities not doing. They have to do something sooner or later. You can see some announcement about the action to rein in the yield. It can come in the form of yield curve control, or it can come in the form of QE. So those are things that again will be influential for the dollar's moves, because if they announce a QE, more dollar will be flooded into the market, and more, you can see more strength in other currencies like yen, euro, and even EM currencies like India will benefit out of more dollar flows because of the QE. Yeah, I mean, we may not be very close to it, but yields are at such a level that the authorities cannot ignore the same. As far as data is concerned, we did not have much data on Friday, but then the focus now is on the job market data this week, starting with JOLTS data tomorrow and concluding with the monthly unemployment data on Friday, with with a lot of focus on the non-farm payroll creation, because the last 2 months we had seen 1 month upside surprise, the other month was a downside surprise. So that's, and also important in the context of Fed policy, which has remained on hold for quite some time now, despite the inflation being on the higher side. So now countries like Europe, they are comfortable raising rates again because their GDP came much healthier. Economy is proving to be resilient. Same is the case with US. The economy has been doing well, and if the inflation is sustaining higher level, and what is the rationale for not hiking the rate? That is a question from some of even the Fed members also. So that's another focus that we will have. On India, rupee was almost entire week was strong, well below 96 for the whole of the week. And there was a news about Bloomberg, deferring the decision on including Indian bonds, in their index, saying that the recent market reforms need more time to become embedded in the market practice. While that is a bit of a disappointment, but they have not cancelled. They have only postponed. And while market has not really factored in this so much, so it should not have much of an impact on the INR. On the contrary, the data published by RBI about having received more than $40 billion in the flows in terms of FCNRB and other schemes that they announced, that has been a positive influence on the market sentiment. So the rupee could again remain relatively strong, but again 95.20 is a good support. Not sure if again RBI would like a rapid appreciation of the rupee, and I am seeing at 95 levels, even if there are good flows, RBI may come and absorb the same and increase their reserves as well. And we will have to see whether continued yen appreciation impacts the Indian markets, the stocks, which have done well in the last week, and then, of course, the rupee also, which has been strong. So all eyes definitely on yen, how far it moves further on the upside against the dollar and its influence on other markets. Thank you.
Thank you, Jake. And yep, so we are focusing on yen because yen intervention has a lot of other impacts, including its impact on carry trades as well as on the dollar yields. So that kind of theme would be in focus, and we'll need to see if 155 acts as a good support, as a good stabilizing base for the yen, and that might sort of calm the carry traders. Apart from that, this week there will be a lot of job market data, JOLTS, which is starting tomorrow, to the monthly unemployment rate and NFP on Friday. Geopolitics is the same old. Trump saying it's holding off attacks on Iran's request. Iran is rejecting any such claims. And for the domestic markets, rupee was strong the entire week last week, trading well below 96. Bloomberg has deferred its inclusion of India in its bond index. That is a bit disappointing, but should not cause a major reaction. Meanwhile, RBI has published that $40 billion of flows have been received under SCNRB and the concessional swap window. So it's a bit of a positive sentiment for rupee as of now. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.